Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. This show gets you answers to all of your stock-related questions, and you might have quite a few of them today, particularly after yesterday's difficult session, you can call it that. There's a bit of a bounce in trade today, of course, and you have the benchmarks that are trading with gains at this juncture of about 0.4% for the Nifty 50. The broader market's also recouping a little bit, and you have the mid-cap index that's up about 1.2% and the small-cap index that's up about 0.7% or thereabouts. But there is a new listing that we should talk about at the start, and that is, in fact, Quadrant Future Tech. It has debuted with a gain of about 30% or thereabouts. That's where it is right now. And this is a company that is engaged in systems that ensure the safety of the railways. We've got Mohit Vora, who's a managing director of the company, joining in. Mohit, thanks so much for taking the time, and congratulations on a solid listing. You've talked about the utilization of the proceeds, and 24 odd crore is going to be used for capital expenditure. Can you take us through how this is going to progress?
First of all, thank you very much, Alex, and thank you very much for your appreciations on the listing, and wish you a very, very happy Makar Sankranti also. Regarding the proceeds, as I mentioned, that majority of the portion will go into working capital as such, because as I mentioned in the past also, that we are going to diversify into cable sectors, into different areas. Plus, on top of that, we already have a big order for Kavach system to be deployed in 1200 locomotives. So the majority of the portion will go into that. However, we already had plans to build new systems into the company. So electronic interlocking system happens to be a very ambitious one. So that was initially a little bit deferred because of intense focus on Kavach. But now we will revive it, and I think part of it, the capex when you mentioned, will go into development of hardware and software for electronic interlocking system.
Mohit, I'm curious about the breakup of the revenue and how that will look going forward. Has that changed materially in FY24? Is that what caused the improvement in the margin? And what is the kind of profile that you will look at going forward?
FY25 is going to be very interesting for us, because as you know, the kind of order we have in hand, that translates into something like 978 odd crores including taxes, and that to be completed by November 2025, this year itself, 2025. So you can yourself imagine the kind of numbers that will be coming. On top of that, we already have regular business coming in from railways, which was something like tentative 152 crore last year, and hopefully we'll have a moderate growth on top of that 152 crores. So if you combine these two, I think we will have a very substantial jump coming in next year that we will see.
I get the numbers are pretty straightforward. Let me reiterate in case anybody has missed that: 978 crore of orders to be completed by November of 2025. So a substantial amount that will be booked over the course of the 3 quarters till that point, right? So from that perspective, revenue growth and top line growth is there. But what about the margins? Are you going to maintain them at the level that you've achieved at 24 odd %? Is that the profile that you would achieve?
At this point, I'm advised to say that we will have excellent bottom line as well, Alex. So please.
I can understand that you're constrained. I can understand that you're I can understand that you're constrained on giving me exact guidances. But would you say that the margin profile of the orders that you are receiving and executing is more or less along the same lines of what you've achieved in the last financial year?
It'll be further ambitious, Alex.
Okay. Understood. Okay, so let me take this opportunity, Mohit, to congratulate you once again. And I'm looking forward to having a conversation with you once the earnings come through and once we can have a conversation about the outlook going forward as well. But today is a day to congratulate you and wish you and your team a very happy Makar Sankranti as well.
Thank you so very much for that. Thank you very much.
All right, there you go. So, solid listing for the company. In fact, it is moving even higher as we speak. 33% gains for the new entrant on the Lal Street. And it's not the easiest environment to be listing in. So it's an interesting story, certainly to track going forward as well. Now, I do want to point out Anand Rathi. The stock reacted to earnings. It is off the low point of the day, down about 2.8% or thereabouts. And that's probably on account of assets under management, which have not grown in the same extent that you've seen over the last several quarters. Of course, to a certain extent, the underlying market also has to be factored in. But we spoke with the management, and here's what they had to say about AUM.
The AUM is flat, as you said, 75,000 up to 76,400, 2% in a quarter, which I think is 1,500 crores. This is, last quarter has been the best ever quarter in terms of net flows. We collected about 3,400, 3,500 crores in a single quarter, where Nifty was down 9%. So if you have to assume that the portfolios would also be down, so this is the number which actually nullifies the market movement downwards and still has added about 1,500 crores, owing to the fact that this has been the most generous from our client standpoint in terms of they giving us a larger wallet share and we are acquiring reasonably large number of clients, which has resulted in 3,400, 3,500 crores of fresh flows in a single quarter, which is the highest ever for us as a company.
Okay, and we'll bring you more snippets from that conversation later on in the day. For now, let's head into the most important part of this show, which is to get all of your questions answered. And to do that, I've got Avinash Gorakshakar, who's the Director Research at Profit Mart Securities, joining me this morning. And we've also got Swati Hotkar, who's AVP Technical Research at Nirmal Bang. Wish you and your teams a very happy Makar Sankranti, happy Gudi Padwa. I missed Lohri, so I'll wish you that as well. And as they say in Marathi, Tirgur gya, god god bola. Hopefully I can get some from y'all as well. But let's start with the conversation, Avinash, on first what you made of HCL Tech, because we should establish that at the start. The stock took a bit of a battering. Is it that people were waiting for the numbers, and once they saw the numbers and the outlook, decided to hit sell?
Good morning, Alex. See, I think my guess is that markets have already discounted that the numbers would be in line with the broader expectations. But I think clearly the numbers were not that bad. I think numbers were decent. I think the guidance from the company was something which the markets were not very excited about. So I think that was probably the reason why the stock took a beating. But this 9% fall, I think, is largely because of some basket selling or some fund selling, because we normally don't see such a sharp drop in the stock price after the company declares results. So this quarter has, on the fundamental side, nothing negative has happened. But obviously, we'll get some more clarity when the management clarifies. But my sense is that these numbers are not all that bad. I think you'll probably see a better pickup quarter in the Jan to March quarter. And obviously, next year is going to be much better because once US President Donald Trump takes over, we'll see a lot of clarity on new order wins. So I think, investors who have already invested in this company should hold on. I think there's nothing to worry on the fundamental side. And I think some value buying will definitely emerge, Alex. These levels definitely look attractive from a medium to long-term point of view.
And HCL Tech had run ahead of both TCS and Infosys. So perhaps to a certain extent, there's some bit of rebalancing that's taking place. Let's jump straight into the questions. And we've got Ram Kumar, who's got the first question. He's writing in from Chennai. And he's asking about HAL. He's bought 20 shares at levels of 5,300, so elevated levels, and he's wondering what to do with the stock right now. Swati, on the charts, what are the levels that you're looking at right now? And from this point, where would you put the stop loss?
First of all, Alex and Avinash, sir, good morning. And you have rightly pointed out it's a happy Makar Sankrant and Tirugurukya Good Puna. As of now, on the technical front, HL as of now looks weak on the technical charts. The weekly chart says that the stock is approaching its oversold zone. We might see some more downfall from almost 100, 150 points from the current market levels. We likely to witness some sort of a support levels by 3700 or 3650 levels. At that level, we might find some sort of a support. The view is bit cautious. More downfall can be seen into this particular counter, not to average it out at the current level since already you have bought it at very higher levels. I will suggest to wait for a time being. If the stock reaches at 3700 levels, you try to average it out at that point of time. Upside can be once again we might witness some sort of a bounce back rally towards to 4200 to 4300. So the view is longer term view is definitely positive. Short term we are likely to witness more selling pressure. So wait for an opportunity to take a buy on deep strategy towards to 3700 levels.
So for now, it's a hold on HAL on the long-term basis. I believe we've got our first caller for the day. Phanindra is calling us from Hyderabad. Phanindra, good morning to you, and how can we help you today?
Hi, sir. Good morning. First of all, I wish you a happy Sankranti to all.
Wish you as well.
Yeah. So, sir, my query is regarding Avenue Supermarket, sir.
Okay.
So, currently I'm holding a few shares of Avenue DMart. My investment is around 23,000 and I'm holding 6 quantity. Recently, I have seen news like Motilal Oswal has invested a huge amount of money. So I have seen a price hike in the DMart in last week. So it went up to 4010 as well. Okay. And my query is I wanted to increase the quantity of the DMart. So I recently started my investment journey. So I wanted to increase the quantity of DMart.
Interesting.
So
okay.
Is it right time to reinvest?
Okay. And
because the price has been come down to 3,470.
yes, I can see that on the ticker. But I'm saying, Phanindra, is this a long-term view that you're seeking? This is part of your portfolio you want to hold for the long term, right?
Yes, sir. Yes, sir. I am seeking it in the long-term perspective.
Got it. Avinash, incidentally, by the way, Phanindra, we had a conversation on KYC, which is Know Your Company, yesterday. Was it yesterday? Yes. So yesterday we had a conversation on Know Your Company, and I found one of the taglines that they used quite interesting, Avinash, which is everything is on sale apart from the stock. And so the discounts that the company's probably been offering to a certain extent having a bearing, but there's so much pressure and so much competition, and the consumption picture is yet to play out, yet to change. Is that something that you're watching very closely? Would you add at this point, though, in anticipation of something moving this year, Avinash?
Yeah, I think first of all, Alex, let's understand, the metrics, what has happened in the quarter 3. DMart reported a 18% growth in top line, a 9% growth in EBITDA, and just a 5% growth in the profit after tax. Now, this is something the markets were disappointed. In quarter 2, also the profit, had slowed down, and there was considerable pressure on margins. So I think what is really hitting DMart is basically the quick service, segment, where a lot of demand has actually got shifted. I would not be surprised that at least for the next 1 or 2 quarters, the margin pressure would continue. And unless we see a strong profit growth of at least 15-20%, the stock is unlikely to be re-rated, because, even if you see the current valuations of DMart at 3,500, I think the price earning multiple is in region of 65 to 70. So, the stock is not cheap by any standards. So I would suggest the investor to, if he has a long-term view of at least a couple of years, I think he should wait for the March quarter to get complete, and then I think we could possibly see some stability in the stock. The stock has also entered the F&O list. Earlier, it was a cash counter. So, selling pressure normally gets aggravated when the stock comes in the F&O list. So my sense is that it's better to, be cautious and wait for maybe the March quarter to get complete. And at that point of time, hopefully, things should stabilize on the business side, on the price side. And that would be a good entry point. Longer term, there's no doubt that DMart will do well. But in the short term, I think there's going to be a lot of volatility, at least for the next 1 or 2 quarters.
All right. So Nestle is the counter that we're looking at next. And this is a question from Nihal, who's writing to us. And he's bought or he's assumed a buy on dips approach to the stock, and he's got 170, which he's bought at an average price of 2,320. So he's losing ground, and so are a lot of people. This is a stock that is not too far away from its 52-week low. He's asking what the view on the stock is. I'll come to you, Swati, on the charts. What's the view on Nestle?
Yeah, as of now, Alex, the whole sector is not performing really well. If we look towards this Nestle particular chart, monthly charts from the last 6-7 months, it's got stuck within the range of 2,300 to almost 2,150 levels. Now, as of now, we are witnessing some consolidation phase into this particular stocks. I believe that as long as Nestle trades below 2,300 levels, the view will be cautious. Once it manages to give the breakout of the 2,300 levels, at least on the closing basis for 1 to 2 trading session, then we are likely to see some change into the trend, and which might take a counter towards to 2,450 to 2,500 odd levels. At the current levels, I will suggest to not to book your losses. You should definitely hold on this particular stock, because we are not witnessing more price correction. It's just a time correction. Just hold on for a time being. Definitely, we are likely to witness some bounce back rally or up move rally towards 2,400 levels. So it's a hold from my end.
Got it. All right. So that's the view on Nestle. I believe we've got our next caller. Vasant is calling us from Tamil Nadu. Vasant, where exactly are you calling us from this morning? And good morning to you.
Good morning. I'm calling from Chennai.
Oh, you're calling from Chennai. Please go ahead.
I have 6,500 shares of SPIC, Southern Petrochemical Limited,
Okay.
at 72.13. Is this a good stock to hold in the short term? It's a fertilizer stock.
Okay. So you bought it based on the technical levels. You're seeking a technical check on this, Vasant?
Yeah, short term. Yes.
Short-term view. So when you define, how do you define that short term? How long would you hold it for?
6 months.
3 to 6 months. All right.
Yes.
Okay, Swati, on the charts then, we're talking about Southern Petro, bought at levels of 72.13. What are the key levels to watch here?
Yeah, as of now, we are witnessing a very strong selling pressure in this particular stock. The 2024 was not really good for this particular stock. I believe that more downside is there in Southern Petro. Up to 63, 62 levels, we can witness more selling pressure into this stock. And thereafter, we can see some sort of a consolidation phase. And then after that, we can witness some sort of a revival into this particular counter. I believe that one should wait in this particular stocks. If you possible, try to average it out at 62, 63 odd levels. If you're getting any pullback towards to 75 to 80 level, you should exit it out. Longer term horizon, the view is not that much bullish, because we are not witnessing any kind of technical patterns in this particular stocks. So I will suggest on every bounce back rally towards to 75 to 80, one should exit the long positions.
Got it. All right. So that's the view on Southern Petro. It's a sell. We've got a question from Satyajit, who's writing in from Bengaluru and asking about Shriram Finance. The stock is currently trading at 530. His buy price is an average of 569. He's got 95 shares, and he's wondering whether to sell to avoid further losses. The stock is at this juncture, Avinash, trading just below 2 times price to book. And from that perspective, on the fundamentals, it is also trading below its 200-day moving average. What is the view on the fundamentals? Would you hold on at this juncture?
So I think Shriram Finance, first of all, Alex, is a very large player in the commercial vehicle financing space. This segment has seen a lot of margin pressure, a lot of volume degrowth has happened. So I think, the market is clearly reflecting this fact into the stock price. But I think, it's a large player in South India, has a decent asset quality. And I would believe that, the Jan to March quarter is supposed to be normally a larger kind of business period for all the commercial vehicle companies. And hopefully in the budget, if there is a aggressive push by the government on infra, on spending more, typically government capex, I would not be surprised that, we could see a good bounce back also coming in soon. So I think, if the investor has a 12 to 15 month kind of time frame, I think he should hold on. I think he should not get panicky. But yes, I think he needs to give in a slightly medium-term time frame, because with the GDP growth numbers being a little weak, the markets have actually beaten down all economy-related sector stocks. So I think that's the reason the stock is underperforming. You'll have to wait for at least 12 to 15 months to get a decent risk reward. But there's no doubt that commercial vehicle financing is a big market, and Shriram Finance can definitely bounce back. So I think longer term, I think he should hold on.
hold is the view on Shriram Finance on the fundamentals. Ashok Kumar is calling us from Punjab. Ashok, thanks so much for calling us. Where in Punjab are you tuning in from and how can we help you today?
Sir, I'm speaking from Ludhiana.
Nice.
I have 301 unit of Deepak fertilizer at the price of 1,030 rupees.
Okay.
So my question is, what should I do now? I should hold it for the longer time or I should sell it now?
When did you buy this, Ashok?
3 months back.
Okay, and you've got a long-term view, as in you've got a fundamental view on this?
Yes, sir. Yes, sir.
So what drew you to Deepak Fertilizers?
I'm having 301 units.
That I understood, but what did you like about the company?
It was growing, so that was the reason. I don't know much about the shares, but I keep on watching the graphs of the shares, and on the basis of that, I go for the purchase.
Understood. So when you say long term, it's more than 1 year, right, Ashok?
Yeah, definitely.
Okay. So since you've been looking at the charts and you've been looking at the move upwards, I'm going to go to Swati on this. Swati, 2.5% gains in trade today. Would you suggest holding on, and what are the upside targets?
Yeah, Alex, the longer term view is definitely positive, but short term view might is little bit cautious. Why? Because the weekly chart suggests a negative divergence. If you look towards the chart from the last 3 to 4 weeks, we are continuously witnessing a selling pressures from the higher levels. So I will suggest try to book your profits or else keep a profit stop loss of 1,050 levels on the downside, because if it's break that level, then the stock might go downside and test 950, 900 levels on a lower levels. So at the current level, I will suggest to hold on, but maintain the strict stop loss of 1,050. Any move about 1,200 level will witness more catch into, or say the fire into this particular stock, which might take a counter towards elevated levels to 1,300 to 1,400. So that will be the short-term target upside I'm looking for. But in this kind of a market, the fertilizer stocks are not really doing very well. Even though the chart is showing a little bit negative signs, I will suggest to book the profits or else keep the stop loss of 1,050 on low side.
Okay. All right. So comprehensive view on Deepak Fertilizers there. Kunal is calling us from New Delhi. Kunal, good morning, and how can we help you today?
Very good, sir. Thank you so much for taking my query.
It's my pleasure.
I just have a question on data patterns.
Okay.
I have 50 shares with the price of 2,400 and a short-term view. Can you please help me with that?
Okay. Yeah. And when did you acquire this, Kunal?
It was almost a couple of months ago. I was hoping that it would pick up the steam, but actually with the fall in the market, it keeps on going down every day. So I'm a bit jittery for that.
I can understand that because you've lost a little bit of ground. But Kunal, what is the time that you can hold this still? Have you put that in place?
To be honest, I was not too sure, but now I think 4 months I can definitely put in. But if there's a long-term, because the share has not moved out of 3,000, so if you could please suggest me what exactly should be my, what plan for this kind of share, this company.
Got it. So, defense and aerospace company, perhaps there could be some announcements in the budget that could be, it could have a bearing on the stock. But let me get a technical view from Swati about the key levels that you should watch out for over the course of the next 4 months. Swati, also provide us with a stop loss so that he knows when to press the sell button.
Right. Alex, the stock has almost retested its 2023 low, which comes at around near 2070 and all levels. Now we have seen that this month we have seen a low of 2050, but somehow this particular stock managed to sustain that levels. I will suggest to maintain the strict stop loss of 2,000 levels on the downside. If it's triggered that level, then more downfall can be seen at least up to 200 points, which might take a counter towards to 1,800 and so levels. My overall view is definitely cautious to negative in this particular stock. The trend will change once the stock manages to give a breakout of a 2,500. Even the client is saying that the stock is not able to surpass that 3,000 all levels. As long as it doesn't break the 2,500 levels, which is the very short-term cluster resistance zone, if it manages to give a breakout level, then only we can witness some sort of a turnaround in this particular downtrend. Then we might test the 3,000 and 3,200 on the higher side. But my view is a little bit cautious. Try to maintain the strict stop loss of 2,000 levels on the downside and hold your long positions. If you're getting any pullback rally up to 2,500 and so levels, try to book your profits.
Okay, all right. So that's the view on data patterns. So hope that answers your question. We have to slip into a very quick break. We'll be back on the other side to take more of your questions, so do stay tuned.
I present the budget for a historic
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Welcome back. You're watching Ask Profit. And the next question that I will take is from Saurabh Oja, who's written in, and he's got a few interesting terms that he's used to tag the large caps. He's talked about bruised blue chips. He's talked about fallen angels. And indeed, some of these companies have been battered quite a bit. But which of them would you buy at this juncture? Avinash, everyone was talking about, over the last quarter in particular, a gravitation towards large cap and towards quality. But because of the kind of frenetic FII selling, which is obviously towards that large cap basket, we've seen a lot of erosion in value there also. Which of those stocks would you look at positively right now?
No, I think clearly, Alex, within the large cap baskets, we like, companies from the auto basket, from the auto component basket, capital goods, something from, the real estate basket, and of course the cement basket. So these are typically sectors where I feel, long-term value can definitely come in. And I think specifically, if we were to talk about stocks, I think Mahindra and Mahindra and Tata Motors, definitely, at current levels, if the investor has a long-term view, definitely, I think the automotive cycle is going to continue in a healthy way. Although currently, there's been a little slowdown in the commercial vehicle and passenger car segment. I think both Tata Motors and Mahindra could be looked upon as good quality blue chips for the longer term. As far as capital goods is concerned, obviously L&T for the wrong reasons has been in the limelight, but L&T also qualifies as a good long-term bet, has a presence in infra, capital goods, defense. And obviously in cement, I think, clearly Ultratech clearly looks to be a big winner if the investor has a slightly medium to long-term view. My sense is real estate, pack, one should not ignore a large player like DLF. We believe the third quarter numbers are going to be very, very solid, and the kind of inventories which are being sold, despite the market being a little competitive, I think DLF could also be added. So my sense is, I think at this kind of point of the market, one has to take a slightly longer term view, and staying invested is very important. So one can look at buying these stocks in a small SIP manner, and then given a couple of years for this portfolio to actually outperform, and then get a decent risk reward.
It's a good time. What I'm gauging from that answer, it's a good time to start building a long-term portfolio, adding things to your portfolio, and also to keep the powder dry, because a lot can change in a very sharp manner, and a lot of uncertainty right now as well. So cautious but good opportunities also exist right now. Abhirami is calling us from Chennai. Abhirami is one of our regular callers. Thanks so much for calling us this morning. Good morning to you, and how can we help you?
Good morning, sir. Good morning, all, sir. Happy Pongal, sir.
Wish you the same. Please go ahead.
Thank you, sir. Sir, my friend is sold on JR Finance 1550 stock 50. His buy price is 295.
Okay.
He asked her stock sold or hold for some time. So what is the target for this time? He asked, sir.
Did you just say that your son bought this stock?
What, sir?
Did you say that your son bought this, or did you buy it?
No, sir, I am not, sir. My friend.
Your friend bought it. So you're asking for your friend.
Yes.
You should ask your friend to also call us. We'd love to speak to them.
Yes, sir.
Okay, so let me take this question to Swati on the chart. Swati, Jio Financial Services bought at levels of 295. What are the prospects on the charts? The stock is currently trading up about 0.7% at 268. But when does it recover the buy price, and what is the potential upside at this point?
Yeah, Alex, the long-term view is definitely positive, even though we have seen a very sharp correction into this particular stock in the year of 2024 itself, from 350 to almost now 250 levels. 100 points of correction, we have seen it. Now the stock is trading under the oversold zone. So we might see some reversal into this particular stock. So downside is really limited, which we can say that up to 250 levels we can be fall. So more 20 points risk is there, but I believe that the upside is unlimited into this particular counters. 300 is acting as a crucial resistance level provided by its 20 days moving average, which is acting as a strong resistance level. If it surpasses that level, then definitely we can witness some sort of a positive momentum, which might take a counter towards back towards to 350 to 370 level. levels on the high side. So no need to worry. The downside is limited. I will suggest to hold on this particular counter. Very soon you will earn a good amount of a profit. Try to book your profits nearby 350 levels. So it's a hold from my end.
Hold is the call on Geo Financial Services. We've got an international caller. Kamran is calling us from Singapore. Morning, Kamran. And how can we help you today?
Good morning. I have M Sumi shares, Motherson Wiring Company.
Right.
And I have around 6,349 units of this stock, bought at 63.04.
Okay.
Okay. So I was looking for a long-term view on this. I bought it, I think, a few months back when it was even at that point in time it was at its low, and now I can see that it is making a new low every few weeks or something.
Understood.
But,
Kamran, can you help me? So you bought a substantial quantity of this. Is this part of a wider portfolio, or do you have a pretty large concentration in this one stock?
No. I think it is a part of quite a big portfolio, around 45 lakhs portfolio I have.
Got it.
And it is just one share.
Got it. Thanks so much for that perspective. And so, do you also, one more follow-up while you're on the call, do you have any other automotive companies, any auto ancillary companies?
No, I don't have any other auto ancillary. I have Bajaj Auto as well.
Bajaj Auto as well. Okay. So Avinash, on the fundamentals, it's a valid concern. Over 6,000 shares being held at a price of 63, and so losing a little bit of ground. What is the outlook for Motherson Wiring?
No, I think clearly longer term outlook continues to be positive, Alex, because one must understand, that Motherson Wiring is a very large manufacturer of wire harness systems to the passenger car companies. And we have been seeing very tepid numbers, although December numbers have showed a good bounce. So I think, here the investor has to take a slightly medium to longer term call. He's invested few months back. But if you look at the business model of this company, they are all vendors to almost all the large passenger car companies. They have a large export market also. And I think wire harness is a very critical product. With more and more cars getting, fitted with electronic components, the wire harness system is a very critical component. So I think, longer term prospects are definitely positive. Once we see a good revival in the passenger car market, you're going to see a lot of upside coming in for this, stock. The product positioning is right. The management bandwidth is also very strong. So I think, one has to give in at least 8 to 12 months and, stay invested here. I think in the near term, I think maybe, the stock may remain a little sluggish, but longer term prospects are good.
It's a part in a car that is not going to go away when you have a transition from internal combustion to electric vehicles. So certainly, point well taken, Avinash. We've got the next question on Yes Bank, which is a question from Meenu, who's writing in from Thiruvananthapuram. And she's bought at levels of 22 rupees per share. I do not know the quantum that she has bought. Actually, she has shared. 405 shares have been bought. What are the prospects on the charts, though, Swati?
Alex, the view is a little bit cautious. Already we have seen a very sharp downfall from 29 to 17 odd levels, but depth is more there. I believe the stock may again retest its 16 or 15 levels downside, and thereafter we can witness some sort of a bounce back rally. But those bounce back rally will be a short-lived because there is no major structural positive formation on the technical front. So the view is a little bit cautious to negative. If you're getting any rise towards to 22 or 23 levels, try to exit out this particular counter for the longer term. Apart from that, you can take a long positions into the SBI or Axis or HDFC Bank. Those counters are really doing very well compared to the Yes Bank.
Incidentally, BV Dulani, who is a retired banker, has bought Yes Bank at very elevated levels 5 years ago. So you can imagine what the price is. He's seen a considerable erosion in the value. Does he sell? See, it's a negative view on the technicals from what I've just heard, but Avinash, would you just book the loss or, hold it with the hope that at some point there'll be a recovery in value?
No, I think clearly, Alex, if you got stuck at the wrong price, then I think it makes sense to, correct your mistake and move on. Because, 5 years back, all of us agree that Yes Bank was trading at, extremely rich valuations. And today the stock has come up to a level where I think recovery of capital is now going to be a very difficult task. So I think, I would suggest that, if he could probably switch over to some other bank where possibly he could try and make up for his losses. I think although, at these levels, there's no major risk for Yes Bank. But I would say a Federal Bank or maybe an IDFC First Bank could be better bets, rather than pondering over a past mistake. It's always better to move on. So I think a switch to IDFC First or Federal Bank would be better.
All right, we've got an interesting question coming through on call. Shankar is calling us from Chennai. Shankar, good morning. And I almost cannot believe the buy price that you have on Butterfly Gandhimati. Can you tell us when you acquired this and what drew you to the stock at the time?
Sir, very good morning.
Good morning.
Actually, I bought the shares at 1996, 29 years back.
Okay.
But most of the time after my purchase, it will trade only around 5 to 10 rupees. Only 2009-10 it will reach it will reach the magic figures of 1,000 rupees.
Yes.
Then I watched the TTK Prestige and the Hawking Cookers. At that time, these shares are very limelight, and next 5 years, these shares goes to 5,000, 10,000 rupees. So I am expecting Butterfly also will fly up to the magic figure. But after the 2010, the last 15 years, it only traded to 600, 2,500, 1,000. So my investment is very, very less amount, only 6,000 rupees. So I am very waiting patiently.
Yes.
Now my question is, any chance Gandhimati Appliances goes up to 5,000, 10,000 in 5 years or 10 years time frame? Then my query is there only. Only.
I got your question. Thank you, Shankar, for asking that question. And you're asking whether Butterfly will fly to 5,000 levels in the next 5 years. Might be a too steep a target, but let me see what Avinash has to say. Avinash, 5 times growth over the next 5 years, not easy for a company like this, but he's done incredibly well on his purchase. He's spent just 6,000 rupees to buy 1,100 odd shares, and the stock is currently where it is right now, over 700 rupees.
No, I think, Alex, the investor has actually bought the share, probably at the right time. But, one mistake which normally all investors make is, the capital allocation call. And I think just buying 6 shares is something which is not going to really make a gigantic proportion in terms of...
Avinash, let me clarify. He's bought at 6 rupees per share, but he's bought 1,100 shares. So he's got a substantial quantity.
So I think then the answer would be, Alex, I think, he's bought it at a very low level and he's got a decent quantity. So I think that means that, at least he should take out his initial capital and then make his remaining shares free of cost. I think over the next 5 years, we really don't know how this company will perform. But yes, now it's been taken over by Crompton. It's a part of the Crompton, family. So I think definitely longer term prospects appear to be good, but I think it makes a lot of sense in these kind of markets to actually take out his capital and, make the rest of the investment free so that he doesn't have a headache to see the stock price every day. I think 5 years, he could make another 5 times his capital, but that would be entirely be his profits. So, that would be a better strategy according to me.
Okay. And just a follow-up quickly, because he mentioned your competitors in the space. Do they have better prospects? Would you say that you can take some money from this kind of appreciation that he's had and put some money into something like a TTK Prestige or something else?
Well, I think he can, but see, I think the alpha to be generated from these levels, Alex, would be a difficult kind of proposition. Because the level at which he has purchased, that kind of alpha, what he has earned in Butterfly, it may not be possible to earn in stocks like TTK. So, unless, he wants to take a call where he wants to compound his money of, say, 15-20% every year, he can allocate some funds to TTK. But I think, you can't compare returns from what he's made in Butterfly to what returns he'll make in TTK because the base level is high and the investment value, obviously, at the current level also is pretty high for TTK.
No doubt. All right. I hope that answers your question, Shankar, and all the best to you. We've got a question on Canara Bank, and Ramesh has been holding for the last 6 months. He's got an average price of 104 and he's incurring a loss right now. Not a substantial drawdown in the shares, but he's still incurring a loss because of the kind of shares that he's bought, 2,000 shares. Swati, on the charts, when does it recover? And it's up about 4% in trade today. Does that momentum continue?
Yeah, Alex, the momentum will be a short-lived, frankly speaking, because the stock is trading in the pattern of a low top, slow bottom formations. Also, the fact that it is trading in a downward sloping trend line. So, as long as this particular stock trades below 98 levels, the trend will be on the downside itself. The view will be a bearish in this particular stocks. Upside can be changed. The trend will be changed once the stock manages to give the breakout of 98 levels on the closing basis. If it's break that level, then 110, 113 levels can be retested once again. But at the current level, the stock is trading near the oversold zone. So the depth on the downside is limited because it has already retested its cluster supports of 87, 88 levels. So I will try to suggest the client to hold on your long positions by maintaining the strict stop loss of 86 rupees and try to book your profits if the stocks manages to give the bounce back rally towards 200, 213 on levels. So it's a hold from my end with the mentioned stop loss.
Okay. Hold is the view on the charts. Ali is calling us from Bengaluru about another bank. Ali, good morning, and how can we help you today?
Good morning, sir. This is Ali from Bangalore.
Nice to talk to you. Thanks so much for calling. How can we help you today?
Sir, I bought the Bank of Baroda shares.
Yeah.
650 shares at the rate of 230.
Okay.
So I want the short-term and long-term outlook of this stock, sir.
Okay, you want short and long term, but when you bought it, did you buy it as part of your portfolio for the long term?
Yes, sir. Yes, sir.
You bought it for the, okay. So it's very close.
I have another 3-4 shares also in my portfolio.
Okay, you have only 4 other stocks in your portfolio.
Yes.
Okay. And are they in the banking space?
No, sir. One is from the pharma sector.
Got it.
Another one is from FMCG.
Sure. Okay, so let me get you a specific view on Bank of Baroda. Avinash, you spoke about a few banks, but BOB was not one of them. Do you think that this is something that you would hold at levels of 230? It's not too far away from the current market price.
So, Alex, I think he can continue to hold. Bank of Baroda is probably the second largest, public sector bank, and I think a lot of improvement has happened in terms of asset quality, in terms of the balance sheet health. And my sense is that the busy season for banks actually starts from October onwards. So I think the third quarter should definitely be much better than the second quarter. And I think the concern in the industry, in the market, is that great growth has come off. Cost of deposits have gone up, but I think Bank of Baroda enjoys a CASA of almost 40% So I think to that extent they've got a fairly good geographical network. I think I would suggest the investor to give in a time frame of at least 6 to 12 months because banking has to do well if the economy does well. I think recent GDP numbers are a little disappointing, so that's the reason markets took a little dislike for most of the banks. So at these levels, I think he doesn't have to worry, and I don't think the stock has got any propensity to further fall off. So he can hold on for the 6 to 12 months and then expect a decent risk reward. So long-term prospects are good, but yes, in the near term, there would be a little volatility.
Okay, wobbles in the near term, what you should watch out for, but long term you can hold. Bajaj Housing Finance is the next counter that we're talking about, and hopefully Swati has enough data to talk about this. Arun has got this question: is this the right time to enter? Swati, any view on the charts?
Yeah, as of now, no wonder the stock has shown a very strong correction from 188 to 111 levels. Currently, the counter is trading near the oversold zone area. Yes, you can trade it, but with the strict stop losses because we are likely to witness some sort of a bounce back rally which cannot be denied after such kind of a correction into the market or say the stocks. So by keeping the strict stop loss of 110, I'm just giving a very it will be a risky trade, not on the basis of purely technical parameters as such, but definitely a bounce back rally can be seen up to 125 to 130 levels. So those who want to chase the momentum in this particular stock, they can take a buy call with a strict stop loss of 110. Upside pullback rally can be seen up to 125 to 130 levels on the high side.
Okay. All right, so that's the view on Bajaj Housing. We're getting a lot of questions in the financial space, and I find that quite interesting. Pradeep Kumar is calling us from Kerala and asking about brain bees, I believe. Pradeep, morning. How can we help you today?
Good morning, Mr. Alex. How are you?
Good, very well. How are you? And what's your question today?
I'm trying. Actually, first try. I just would like to know about add more and an exit from the share right now, right position.
Whether you should add more or exit, and did you buy it? So you bought significant quantity, 3,000 shares. Yeah. Did you buy it based on the fundamentals?
Yeah, it start almost maybe listed in like a 6 month or something like that. But the performance I feel we're more comfortable, and the product actually, the business, that kind of business, I'm sure is going to be more up. But in recent case, I don't know what is the technical issue. That's why I would like to know more about that.
Okay, so I'm guessing too much data on the technical front. So let me go to Avinash. Avinash, First Cry. This is a stock that has given up quite a bit of ground, and as a result of which Pradeep has lost value in his holding as well. He's holding considerable amount, 3,000 shares at levels of 655. What does he do based on the long-term fundamentals?
So I think this company has a very strong long-term future. In the short term, I think the markets have probably understood that the kind of revenue growth which was expected during the time of IPO, that has not come in. But the segment in which it operates, Alex, is very promising. I think if you take the next couple of years, I think definitely a lot of wealth can be made from this business and from this stock. So I think you need to give in a little more time. I think if he has a little amount of idle funds to spare, he could even average the stock, but I think he needs to give in a medium to long-term view here. We continue to be positive on the company over the longer term, but yes, unless and until we see strong quarterly numbers from Q3 quarterly numbers and some management commentary which is little positive, until that happens, the stock is going to remain sideways. But yes, I think over the longer term, 12 to 18 months, this can definitely generate a lot of value.
Let's run through a few more quick questions, and this one's from Ramesh. He's writing in about Kalyan Jewelers, which he's bought at levels of 648. 45 shares is what he has. Quick view on this one. Avinash, would you hold or sell?
So I would continue to hold, although, the markets were expecting a stronger growth, on the gold ornament side. But I think it remains to be a very large player. I would believe that there's no panic. And I think the numbers for Q3 should be a lot better than Q2. And I think, in the longer term, I think, they have a good geographical network. So they should continue to do well.
Okay. Keynes Technology, and this is a question. All right. I'm not sure who this is, but okay, Nirmal has got this question, and he's bought at levels of 4,400 rupees, 20 shares, and he's making a considerable profit. He's wondering whether to book profits at this juncture. He would have liked to speak to us, but unfortunately the phone lines are engaged. Swati, on the charts, would you sell at this point?
I will not suggest to sell at the current market price, but if you want capital, then definitely you can book your partial profits because you are earning a handsome amount of money. On upper side, more upside can be seen up to 6,800 to 6,900 on the higher levels, whereas on a downside, it has a very good support at around 5,900. Today, it has retested and we are witnessing some bounce back rally. So overall, the view is definitely positive. We are likely to witness more upside towards to 74 to 7,500 from here onwards. I will try to suggest the client to hold your long positions by maintaining the profit stop loss of 6,900 on a downside and carry your long positions.
Got it. All right. It is time now, Swati and Avinash, to hit the rapid fire round, which is 2 minutes where I toss as many questions as possible at you and you answer as quickly as possible. Chandan Jain from Hubli is asking about two capital market plays, BSE or CDSL. Which would you buy for the long term, Avinash?
So I would prefer a CDSL because I think CDSL is the only depository player listed, and I think in terms of the value compared to BSE, CDSL can be a better choice for long term.
Okay. Varun Beverages, this is a question from Kishore. He's given me a very detailed question, but I will simply ask on the technicals, would you buy at this juncture for the long term, Swati?
Not at the current market price, but if you're getting any dips towards to 540 or 530 levels, that will be a very attractive levels compared to the risk reward ratio. Yes, you can buy on FD dips. Upside, we can see up to 640 levels from here onwards.
Okay. CESC is the name of the counter. Devika wants to know, buy price is 194. Would you sell at this point, Swati?
Not at all, Alex, not to book your losses at the current market price. Even though the market is showing some sort of a selling pressure, I will suggest you add on your long positions so that average out can every dips towards to 140 levels and hold on your long positions. Definitely, you can see some more upside rally towards to 180 to 190. So it's a hold from my end.
Okay, Shakti Singh is calling us from, messaging us from Jamnagar. SBI Cards is the counter, 55 shares bought at levels of 725. Avinash, is this a hold for you? It's near the stock price.
No, I think he can hold on. I think clearly, with the digitization of financial products going on, and with credit increasing rapidly, I think SBI cards should definitely benefit. So I think it's a hold.
Okay. Tanla Platforms bought at levels of 730. This is from Sarat. He's asking if it's the right time to buy more at this juncture. Avinash?
Yeah, I think if the investor has a 12 to 15 month time frame, this is a platform business, and I think a good amount of value can be created.
Okay. Sigachi Industries, very quick view. Buy price is 53.46. Would you hold or sell? Neva wants to know. Swati on the charts?
You can definitely hold on this particular stock because already we have seen a sharp corrections. Upside can be seen up to 54 to 58 levels. So it's a hold from my end.
Okay. Avinash, Swati, thanks so much as always for taking the time, and pleasure having you on the program. You've answered a lot of questions today. That brings us to the end of this edition of Ask Profit. It's been a pleasure bringing it to you. Do stay tuned. Lots more to talk about over the course of the day. And this is NDTV Profit. Thank you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday. Hello and welcome. This is KYC. I'm Agam Vakil, and in this show, we take a look at one particular stock every single day, and we talk about how it's done in the past and what we can expect going forward. We try to get in a street view and also try and assess, the outlook of these companies, keeping in mind what the management could say. Of course, in terms of today, we're going to talk about ONGC. This is one of the most widely held stocks as far as the markets are concerned. Been a part of the Sensex, been a part of the Nifty, and anyone who's been in the markets for decades and decades, they will be well versed with what ONGC is all about. It is the largest crude oil and natural gas company in India, certainly the biggest in the PSU space, and it's an upstream company, so that's the other thing that we need to keep in our mind. It does explore and produces oil and gas, oil specifically, crude is what we can keep in mind. Of course, it's contributor to over 70% of Indian domestic crude production, and it does have plenty of exploration sites out there offshore particularly. But moving on, let's just talk about a handful of other factors that we are going to talk about as far as ONGC is concerned. ONGC in general, of course, as I've mentioned, is a very widely tracked stock. It's a very well-held stock. Well over 28 lakh investors hold ONGC at this point in time. And of course, it's one of the relatively larger holdings of the government of India as well. In every show, what we intend to do is talk about a handful of parameters, and we actually rate these companies based on the parameters, which would include something like your income statement, your balance sheet, your cash flows, return ratios. We're also going to talk about cash flows, shareholding, street credentials, as well as street coverage, and give the company a sort of rating in terms of how it's done in the past. And then we try to look forward by bringing in a street view and perhaps talking to experts about what we can expect going forward. But before we do that, let's also get in my colleague Mihika, who's going to give us a better idea of how this could potentially be. Well, I'm going to start off with the income statement and, in terms of how that things could potentially pan out as far as the income statement is concerned. So, in terms of the standalone numbers, and the reason why we're using standalone numbers is because it does have ownership on several other companies, and it would be perhaps fairer to give you the best view as far as the standalone, standpoint is concerned. So you do have revenues which have risen by around 12% of CAGR. Do remember that this is a large cap company, and it's a very well established company which has been around for decades, as I mentioned, which is why a double-digit growth is reasonably positive for the company. It's in terms of its EBITDA too, it's seen about a 13% CAGR over the last 3 years. Net profit has not been growing to the tune of your revenue and EBITDA, but there is a lot that comes through between EBITDA and the bottom line. So that's something that we need to keep in mind. As far as its operations are concerned, we do see that improvement coming through. And in fact, its margins have gained about 150 basis points over FY22, FY24. Let's move on and talk about the other factors as well. And of course, I'm going to also address how we are potentially looking at the balance sheet coming through. So when it comes to the balance sheet, it has a significantly large equity, as you can see on your screen there. And the reason, of course, is, decades and decades of accumulated profit. This is, of course, after dividends being doled out. And that's where we're starting to see this come through. Based on that, we're looking at, a relatively low debt. And a lot of that will, of course, be on account of just working capital largely and near-term expansion. And of course, cash equivalents will be at a reasonable level. And if you just compare the cash levels and the debt level, you know that the debt is negligible. It's certainly not as large as what one might take, and especially given the equity. Well, it's nothing compared to that. So that's of course always going to be a positive, which is why we'll give this one a thumbs up. But let's move on and talk about a handful of other parameters too. So I'll get in my colleague Mihika to tell us a little bit more about the cash flows as well. Mihika, what are you observing here?
Yeah, first I'll talk about the production and their guidance. Their cash flows will be dependent. Anything that ONGC earns, you can basically divide it into two parts. One is your production, one is your realizations. So when you talk about your production, crude oil, FY19 stood at 21.1 million metric ton. You have FY24, 19.5. You can see the decline, 6-year CAGR. Crude oil production has fallen 2% from a 6-year base, and it has consistently been falling over the past decade. In terms of your natural gas as well, 24.8 billion cubic meters in FY19, FY24 stood at 20 BCM. It's a 4% CAGR degrowth. And even if you talk about your total production for ONGC, which is your crude oil and natural gas, it has declined at a 3.8% CAGR over FY19 to FY24. When you talk about their guidance, well, ONGC